What's going on, you guys? It's Saturday, October 1st, 2022. It's going to be Daily Log episode 20. This is going to be a recap of what happened yesterday in the market on US 500 or E-mini S&P if you're trading futures. I wasn't able to get to the video. I had some plans last night with some friends, so always got to remember to keep your social life as well when you're focusing and studying and trading. I know a lot of the entrepreneurs and a lot of people say to constantly hustle, constantly hustle. There is time to have a good time in life after you've worked hard. But going into the chart on the daily time frame we discussed on Thursday, we traded into that fair value gap. I noted how the bodies closed and respected the discount low of that fair value gap. So it was a really good sign to see bearish prices. I was overall bearish on this. I was aiming towards the sell side liquidity. I had you guys note resting at 35.99. We eventually traded through it basically on the last couple hours of yesterday's close, which was cool to see. If you go back to my video, I also posted this in the community tab. I said to watch if price trades above the equilibrium of this dealing range here from the swing high down to the swing low, or even this dealing range from this swing high here down to this swing low here. I was annotating that because we're basically stuck inside of a price range, and it makes things very improbable when it's not clearly one-sided and where price really wants to trade to. So you can see the morning session was super sloppy. There was a few setups and a few things you could have, got into, but for me personally, there really wasn't anything noteworthy or exceptional by my criteria or standards. So looking at the 4-hour, I also annotated this fair value gap here. I said to watch it, or rather it stay open. We actually traded right back up into it. And if you look at the bodies here, we basically closed right at the premium end of that. So that's really nice to see. If we were to close above that, that would have been a huge indication that either A, we're going sideways, or we could potentially go higher in price. But for me, overall, it was a great trading week. You guys got to see how somebody is able to make money on Monday and Tuesday and be able to sit out the rest of the week. And I did that for a particular reason because that's what my rules and criteria have set out for myself. If I make my profit target, it doesn't matter if it's the beginning of the week, end of the week, I'm done for the week. I don't touch the markets with a live account because there's no reason. Some people tell you to keep pushing it when you're doing well. In my experience, I think that should be the opposite. I think when you're doing well, you should really start watching yourself because you're setting yourself up for overconfidence and greed, and that can tear your account apart if you let it. So that's how I kind of minimize and maintain myself, is knowing when to stop trading and having the self-discipline to just trade on a paper account, demo account, just to kind of get the reps in, to get that out of your system. Because sometimes you feel, even if you're done for trading for the week, just go onto a demo account and start just pressing buttons, try to get that out of your system, because if you don't, it will manifest itself and accumulate, and it can lead into your live account and bleed your account or your P&L down. So that's a little side note. Looking at the lower time frames, let's go down to like a 15-minute. I actually want to go out to 1 hour. I know this doesn't have it on the futures chart, but I found it pretty interesting that on the indexes we gapped here and we came back and filled in that gap. So it kind of acted as a fair value gap or volume imbalance. We just traded back into and then traded lower. So that's cool to see. Looking at the 15-minute, or maybe the 5-minute, will give a little bit more clear picture of what was happening. There wasn't any nice shorting opportunities to really go short. There's a couple long opportunities, but I don't really see the reasoning for that. There's a small market maker buy model here on like a 1-minute or 2-minute, but it's pretty sloppy in my opinion. I know ICT had a couple of videos yesterday, him going long and saying, I was watching a couple of these fair value gaps. So on the 5-minute, there was a fair value gap here, not really my liking. It doesn't obviously go with my overall narrative, which is always when I'm trading, is going with the narrative. So we traded in this fair value gap. We spent way too much time in it for my personal liking. Like we stayed sideways for almost a half hour until we expanded higher. And then we had this other fair value gap here. And ultimately traded above the high here, which was the original consolidation on the 1-minute market maker buy model. Traded back into this 15-minute fair value gap here. And then looking at the rest of the day, if you were to try to go short, there's a nice little fair value gap here. Probably touched into just the equilibrium of that dealing range, if I had to guess. Yeah, just a little bit of equilibrium and go lower. There wasn't any other fair value gaps. I know someone commented on my video that all that rings in their head after the video is fair value gap. And that's for a particular reason. I could annotate a lot of order blocks, breakers, mitigation blocks, all these different PD arrays, breakers. So the reason I only annotate really fair value gaps is because that was an issue I had after going through ICT's mentorship. Was I had all these tools. It's like somebody giving you every single tool to make a shed. And in reality, you only really need a hammer and a nail and maybe one other thing. And that's what I've kind of honed down my trading to, is I understand everything. And I don't say that from an egotistical standpoint, but I understand probably 90% of what ICT's taught, or at least what's out there. And I only use a small percentage of it because you only need that much. And I think a lot of newer students, they try to learn everything and they try to apply everything and they try to throw everything at the chart. And that's not how this works. Get an understanding of how it works. Get an understanding of what breakers are, mitigation blocks, central bank dealing ranges, all of that, 20, 40, 60-day look backs. But in reality, all you need is liquidity. You need to understand the narrative over everything. And I'll make a separate video possibly on this, but narrative is the most key important thing to your trading, because if you don't understand where price is going on a macro level down to a micro level, that is going to be your biggest issue. You need to understand from a weekly, monthly, daily time frame, where is price drawing to? And you need to have good confidence that it's going to draw near that target. And then you go into the lower time frames and you find that entry pattern. And that's all you need. You don't need to throw a million different things at this to try to make it work. And this is just simply coming from experience. This is somebody that's a charter member that's came through this and now has simplified his trading down to one simple model, which is the YouTube model, and then just using my experience and narrative to basically pull it all together. So tomorrow I'm going to make a psychology video. I'm working on it a little bit right now. It's going to be more of a PowerPoint slide, and I'm going to go over a lot of different things that traders deal with on a day-to-day basis, weekly basis, monthly basis, and it's going to go over psychology and money management and basically how you can tie that in together with your technicals. I believe your psychology is the most important, but if you don't have the right technicals, that's going to suffer as well. So you need to have both. I don't think if you're somebody that's only been trading for like 6 months, maybe a year, psychology may not stand out to you as much. I mean, it definitely will. You'll see the common traits and things that happen a lot to you. But if you don't have like a solid model that you're back tested, forward tested, seen in live market with live funds, it's going to be difficult for you to kind of work through psychology if you haven't been in those situations, because you need to understand what it's like to lose money, what it's like to overtrade, what it's like to tilt, what it's like to fear missing out, so many different elements. So you can definitely watch the video tomorrow, or always go back to it in time. Let me touch on this for next week's sake. Let me go to a monthly time frame. This is extremely bearish. So I wouldn't be surprised in the next coming months, excuse my voice, if we continue lower into, I like the sell side underneath this low here, 32.10. And then once we reach into this area, but I think the weekly time frame gives the best perspective for us. I've been talking about how we're going to draw into this fair value gap and then this order block. So once we reach into that area, then we start worrying about, not worrying, but we start gauging and analyzing where price could head next. We do now have a fair value gap resting here. So that is something, if we were really bearish, I would like to see price trade up into this fair value gap and then go lower. Looking at the chart, I think we may reach the fair value gap / order block before we retrace back into this fair value gap here personally. Small little volume imbalance here, so note that on your charts. If you look at, I forgot to mention this, I'm sorry, I'm going to jump around just a second. If you look at the 1 hour yesterday, US 500 made that lower high, US 100, so NASDAQ made the higher high, and then US 30 made the lower high as well. So that's a bearish S&P divergence. So definitely put that in your study journals. I think that's going to be it for me tonight, guys. Appreciate all of you. Definitely leave a comment and maybe some suggestions for tomorrow's video, because I'll make sure to try to put that into the video. But until tomorrow, good luck and good trading, everybody.